All right. We are live. Hello, everybody. My name is Peter. I'll be the moderator for tonight's. Today, we're talking about Bitcoin DeFi, institutional liquidity on Solana, and the on-chain Bitcoin landscape. And we have great speaker lineup today. We have a few important speakers, Justin, Max, and Gianni. I can pass the mic down to you guys and do a little bit of self-intro and what you guys have been working on. First, we welcome Gianni from the Solana Foundation and Max, head of ecosystem at Menta Alpha. And lastly, we'll have Justin, founder and CEO from Zeus Network.
I guess I'll go first.
Sure.
Sure. Hi guys, I'm founder of Zeus Networks. We've been building on Solana for the last 5 years, since early 2020 to the last 2 years, and we've been building on a lot of Bitcoin infrastructures for Solana. In fact, I think today our TVL went all-time high. Solana now has locked around 523 native Bitcoin, all by retails and some institutions, which I guess we're having the call live streaming today, explain why our TVL has grown tremendously for the last few weeks and why Menta Alpha has chosen us as a partner. Thank you.
Awesome. Gianni, would you like to go next?
Sure. Hi, I'm Gianni. I'm at Solana Foundation. Nice to meet you all.
Awesome. Max?
Yeah, this is Max, head of ecosystem at Alpha. So I would like to really apologize for, keep the camera closed, not having you guys see my face. I'm actually at the airport waiting for my flight to Korean Blockchain Week. So probably see you guys in person sometimes later. But yeah, happy to join the call and share our partnership, insight and stuff, what we are building Solana and Zeus.
Awesome. Welcome, Max, and appreciate you for taking the time, as well as Gianni, to tune in for the call. I know it's KBW week, and we're also in Korea, so hope to see you guys soon. But without further ado, let's dive into our discussion. So we're talking about Bitcoin supply on Solana, actually surpassing 1 billion for the first time ever this month. And in recent months, we've seen more and more institutions looking to deploy or bring their Bitcoin liquidity onto Solana. What are the key motivation driving this institution to deploy their Bitcoin liquidity onto Solana? And other potential implication could this capital inflow have for the broader Solana ecosystem and DeFi landscape? And I think this first question would be a great question for Gianni. I know you've been putting great work in terms of doing Bitcoin adoption on Solana. So what are your insights on this?
Yeah, I think it's a great. It's great to showcase how the Solana as an ecosystem has grown over the years. Bitcoin is not the only asset growing. There's also other assets growing on the chain, including tokenized equity, tokenized money market fund, and other RWAs. Bitcoin, in my opinion, is one of the most appealing RWAs in DeFi. It's crypto native, very composable, and everyone understands what Bitcoin is. So it's very natural to see Bitcoin reaching 1 billion, for the first time, after more and more people understand, what Solana is good for is the infrastructure and the fast and cheap blockchain, and then what Bitcoin is very good at is just being the store of value and the best DeFi collateral on chain. So this is something we've all kind of been looking forward to, but it's very great that it's happening after all.
Yep, awesome. Max, would you like to go next?
Yeah, sure. So for institutions, there are usually a few angles when they are, looking for yields and looking for where they would like to put their Bitcoin on. So the first of all, a lot of institutions we see, not only Web3 native institutions, but as Web2 institutions, they are building their Bitcoin treasury and equity. That's something they're doing for sure. And when we see Bitcoin is not growing that rapidly fast, like what they've been doing in the last several cycles, it becomes more and more crucial for institutions to, generate yield, probably like market neutral yield Bitcoins, to have, extra benefits and extra profit by not only just alone and hold the Bitcoin. So, and when it comes to Solana ecosystem, definitely one of the most great choice for a lot of reasons. And I do believe a lot of top tier projects here building in Solana, they also play the role of bridging the Bitcoin liquidity and be the bridge of all those institutions to the Solana ecosystem through all different ways, meets the needs of different institutions, and try to make it happen. So yeah.
Yeah, thanks for sharing the insight. Justin, I know you've probably been talking to a lot of institutions in the forefront. What are your insights for this growth on Solana?
Well, I look at this as in two stages, right? Like when we start building on Zeus, it was less than 500 BTC deposit into Solana. Fast forward right now, with almost 9,000 BTC into Solana as liquidities, and that's phase two, where a lot of these BTC are looking for organic yield on chain. And by far, I think Solana is providing one of the robust yield, sustainable yield for all these Bitcoin depositors. And third, but most importantly, I think that's something that Zeus is trying to look for right now, is that BTC as a primitive asset is, without question, is probably the most recognizable digital asset between CeFi and DeFi users. And Solana is far more than just fast and speed and cheap. I think Solana has one of the best distribution channels. And I think here's the reason why Gianni said that we have fast growing RWA assets and real yield coming to Solana. And then I think with that being said, I think BTC yield, if we can use BTC as asset, attracting more CeFi yield into DeFi, we can distribute these yield and BTC version to millions of people, which is very active on a daily basis into Solana.
Mm-hmm. Yeah, talking about growth, we recently released our On-Chain Bitcoin Economy Report 2025 and have observed some huge inflows of BTC from major ecosystem over the past year. Here you can take a look, for example, Arbitrum losing to Base and decreasing 40% in BTC supply. BNB chain losing about 3,351 BTC, and BTC L2 is a little bit struggling. Merlin has lost 80% of their BTC supply. Meanwhile, Solana's Bitcoin ecosystem continues growing, increasing in Bitcoin capital, increasing Bitcoin holders, growing ecosystem integrating tokenized BTCs. What's broken in these other ecosystem that's causing this reduction in capital? Is this a temporary rebalancing or a fundamental shift in how Bitcoin gets deployed on chain? How do you see the competitive landscape evolving? Gianni, what is your take on this?
Yeah, so that is a good question. I think there is no shortage of competitive L1s or L2 that can attracts TVLs. And I think the market is quite efficient in that liquidity usually congregates where users are and where utility is. And that's where Solana is at the moment for blockchain. Solana can track Bitcoin liquidity by providing very competitive yields, a very seamless user experience, and a secure dynamic ecosystem backed by top DeFi protocols. And we see more and more institutions, vault curators, and large LPs coming to Solana. They feel comfortable depositing large sort of amount of assets on chain and managed by professional sort of risk managers and curators. So that is why a lot of the, Bitcoin TVL has been congregating at Solana while leaving some of the more niche ecosystems that temporarily had a TVL boost because of a token launch or airdrop Ponzi sort of mechanism. So I think my thesis is that in crypto, liquidity is the most important mode, and I think Solana has gotten to a really good spot where we have really good sort of user experience and liquidity. So as a natural trajectory, that's where all sorts of TVL will come, not just Bitcoin, like I said, but also other great RWA assets, and of course Solana native ecosystem sort of TVL as well.
Yeah, definitely. Justin, what is your take on this? Zeus Bitcoin all-time high today, and almost 9,000 Bitcoin on Solana. What are your insights over the past year and a half or so?
Yeah, definitely. Like, it's fascinating to see how much Solana has grown in terms of BTC TVL for the last 2 years. I think what's more interesting is that our team internally would look at the data that why would people buy ZBDC? I think these are the questions that we keep asking ourselves. Obviously CBBDC, WBDC are probably the most biggest pairs, BTC pairs in the space right now, and we realized that. First, Zeus as a technology layer, we enable Solana to validate Bitcoin transactions, aka means that Solana has a store native Bitcoin into the blockchain itself, which means that if you are a user that doesn't want KYC, KYB, or you are a user that doesn't want to go through a central exchanges to unwrap into native BTC, in fact, 34% of ZBDC buy are actually coming from sold to ZBDC and unwrap into native BTC. So, I'm not saying that ZBDC is here to overtake all these institutional BDC versions, but instead we are providing one-of-kind alternatives, right? So I can speak a bit of alpha. What Zeus trying to do next is that we also realize that there is not enough yield. I mean, obviously, Solana provides the most sustainable yield across the entire space, but there is not enough yield opportunities for BDC holders or even for SOL holders that want to buy Bitcoin to earn on that as well. So until today, I spoke to more than 10 institutions for the last few weeks. They are providing range around 4 to 7%, 8 to 10% of different range of the yield for native Bitcoin. We can potentially bring this into Solana as a blockchain, and when a user can just deposit native BTC, like they deposit into central exchanges, and then withdraw it in the yield matters and with no KYC and KYB. So I think we have only started for chapter 1 for Zeus, which we've proven our technology works. We are trusted, and you can trust us with the future roadmaps. I think the next chapter, what we want to do is creating more yield opportunity on native BTC, specifically on Solana.
All right. Looking at this migration pattern, where do you predict the majority of productive Bitcoin will be, in a year or two? What would need to happen for Solana to capture, 10% or more of the circulation Bitcoin? Perhaps Gianni, what is your take?
Yeah, I think it's probably going to be winner take most for this specific landscape. I think Ethereum will probably still dominate a lot of the TVL because the first mover advantage, and that they have some of the largest DeFi protocols on ETH mainnet. I do think Solana has a good shot of becoming number 2. I think currently we are number 5. And I think the way to actually move up the league table or, continue to grow the TVL is to provide real utility. And that will especially come in very handy in the bear market when, most yield are muted across the board. And if there's organic activities happening on Solana, that would be the most attractive place for users to hold their BTC.
Right. Justin, what is your prediction, for Bitcoin on Solana in the next 2 to 3 years?
Well, we have grown so much where BTC as a layer 1 doesn't providing any programmable opportunities for builders, founders, and then nor needers on the opportunities for depositor or liquidity provision, right? And fast forward right now, 2025, Solana has been providing one of the most sustainable yield for a lot of depositors and then institutions. And what's next is where I predict a lot of RWA yields will kick into BTC, and then will tokenize into different forms versions into a blockchains. Like I said, I don't think all these TradFi bankers or the banks next to our house will create BTC structured products. Instead, we'll have to rely on these experienced market making teams or trader teams that are providing sustainable track records and enough trusted data runes that can provide good yield on top of our native BTC holdings. And with that being said, we need a better distribution channel. There is not being a better distribution channel than Solana right now, that we have the most active address users by daily, in a way that what if we can tell all these users that you don't have to buy Bitcoin on the central exchanges anymore. You can buy on Solana, and then you don't have to earn with central exchanges on their earn features. Now you can earn on Solana as a blockchain with no KYC, KYB. I think we could create another wave of interest for a lot of institution holders or retail holders to know that, hey, why don't we deposit on chains, into the products that is actually being created by Zeus and generate sustainable yield in the long run. Thank you.
Right. As we know, there are currently multiple wrap versions of Bitcoin asset on Solana, such as WBTC, CBBTC, XBTC, and ZBTC. Max, from an institutional perspective, how do requirements like proof of reserve, audit standards, integration complexity factor into adoption decisions? Are institutions building around specific wrap Bitcoin standard for their DeFi strategies?
Yeah, that's a very, very, very interesting question. We are a Nasdaq listed trading desk. We not only manage our own Bitcoin, we help a lot of our clients, especially miners, help them to manage their Bitcoin treasury. And one interesting thing we find out is actually a lot of builders, on-chain native builders, they have a very, very different perspective and very, very different understanding of yield generating this thing. First of all, a lot of institutions actually they do not want to, put their native coin on chain to other wallet address, or give out actually keys that you can help them to manage. You can request to lock or withdraw from the custodian wallet. The simple mindset help here is as for example, for miners, mining business itself is profitable enough, and it's very steady business. So miners will never risk their principal to do yield generation, this kind of things. But a lot of Bitcoin related projects, they are a little bit too aggressive in terms of generating high potential returns, but they're kind of behind in terms of the risk management side, and that's something a lot of institutions they actually care a lot. Firstly, we need to make sure the principal itself is safe. It should be managed safe. They are away from all kinds of on-chain hack risk, and it's better the strategy is kind of neutral. If it is completely delta neutral, like a BTC market neutral strategy, will be really hard to generate significant yield. But it's basically about how you like to adjust your risk and return, right, to provide juicy yield with a relatively acceptable risk. So yeah, that's from my angle, what I see, there's a gap between the app builders and the institutions who hold a lot of Bitcoin, like miners and OGs. So I'm quite bullish on builders and project teams who can really hands-on to be the bridge and to guide all those OGs and wells and miners to try DeFi related strategies, and also try to meet the requirements and how they can keep the principal safe at the same time to generate really juicy yield. And I do believe that's BTCFi, or this is not a new narrative, but I do believe there's going to be a very, very big market here.
All right, thanks, Max. Gianni, how do you view this competitive landscape, and what direction do you see for future development? Why do we need more tokenized version of Bitcoin on chain?
Yeah, I think we have, quite frankly, enough Bitcoin wrappers on chain. What actually needs to be improved is the liquidity and the sort of the slippage of all these different assets. So institutions can come in and deploy size and not have to worry about when they unwrap the BTC, they'll incur slippage. So something I've been working on is to actually increase the liquidity of individual BTC wrappers on chain, especially at sizes above 100 to 1,000 BTC. So far, I think most of the deposits are smaller, so the slippage is fine. But as you go up in number, um, anything above 100 to and above, I think it's becoming a bit more tricky for people to underwrite the slippage risk. So it is something that we've been thinking a lot about at the Solana Foundation, how to create sort of liquidity, centralized liquidity wrapper of some sort to allow different individual wrappers to be able to have better interoperability and liquidity as well. In terms of different types of wrappers, I think the whole Solana ecosystem has been quite community driven and open sourced. We have always kind of attracted builders who, like Justin and the Zeus team, have been at the forefront of BTC on Solana, even before any of those large institutions like Coinbase, BitGo, and OKX came. So that's very important because this is where builders lead and builders come find the alpha and ship a product that users want. So we want to continue to encourage that. And of course, a lot of the Western institutions are very familiar with the Coinbase custodian brand and trading products. So CBBTC has done quite well among the sort of in your institutional circle. And I think in Asia, there could be a few options as well for, folks like Meta Alpha and, large Bitcoin mining family offices to kind of deploy BTC on chain. So we want to create a very diverse range of options of BTC wrappers on Solana, while also making sure each one of them have pretty good individual liquidity in the long run.
Justin, I know you've been advocating one BTC equals one ZBTC. And from observation on chain, a lot of these retail users, they choose to use swap, buying ZBTC using Sol or other assets. But on the other hand, we're seeing a lot of large inflows of depositing native Bitcoin, minting ZBTC directly, and also burning ZBTC and going back to native Bitcoin. What are some of the observations that you see, and are there any development to enhance this experience? Happy to hear your insights on this.
Yeah, for sure. When I guess I have to go back to the fundamentals where when a blockchain ecosystem kicks off, it has to be infrastructures, right? Obviously, when we talk about DeFi infrastructures, it enables future DeFi projects to have that composability, interoperability to be on top of each other's. And also, same thing goes to NFT as well, right? You need NFT swap, NFT marketplace to enable these NFT activities to kick off on the blockchains. I think same thing goes to Bitcoin as well, right? We believe that in order to tokenize more Bitcoin, there has to be the right infrastructure for that. We have tokenized the first ever version of the BTC L2s, which is called ZBTC, backed up by wide real Bitcoin, which we think that there should be more version of BTC through Zeus. Right now, one ZBTC is enough, frankly speaking. Hopefully, I think similar to Alpha as well. We want to tokenize more and 5 to 10 version of BTC coming along in the next few months. And I think we're ready for that. We have gained the trust from the public. We've gained the trust from institutions like Meta Alpha, and now leads to the table where what are these tokenized BTC coming along, and then what kind of yield are they providing to the retail and an institution as well.
Right. Lastly, I think looking ahead, what should builders, institution, or Bitcoin holders be doing today to position themselves for the next phase of on-chain Bitcoin growth? Is there anything you want to share with the community about upcoming activities, Gianni?
Yeah, I think upcoming activities is mostly what I just mentioned, which is increasing the liquidity of each individual wrapper and making it very easy for large institutions to swap in and out and put them into DeFi protocols. We will also continue to educate folks on existing BTC wrappers. I don't think on BTC wrapper it's the more the merrier. It's actually you want to have a few really strong, very liquid wrappers kind of and having the potential end users understand the differences among all of them and why they should go with which one to serve which use case versus having 30 to 40 wrappers that will eventually just flood the market and confuse users at the end of the day. So it's really just about helping the winners grow even bigger and educating the audience on why they should choose which wrapper for what purpose.
Awesome. Thanks, Gianni. Appreciate for what you do. Max, is there anything from your end that you would like to share with the community?
Yeah. So for us, we are. It takes a while for a trading desk, a sell side trading desk who are usually neutral, like not betting on the market, who are actually TradFi background trading desks to try, products like those ZBDCs kind of products to help us generate yield, and even help a bit on distribution and stuff. What my take on this is, I do believe a lot of Bitcoin like BAT companies, Bitcoin miners and whales should be more open-minded to give it a shot, because right now the technology is there and the thesis is there, and the yield is actually good. So, but still a lot of big institutions are things. It takes them a while to digest and understand like where the yield comes from and what risk they are facing, and what kind of return they can look up to. But still, it takes time. But yeah, I think a lot of institutions and miners should be a little bit more open-minded in terms of and we are actually doing a lot of things to pushing with ecosystem projects together, to educate, to be the bridge of institutions and those kind of BTC on-chain yield projects.
Yeah, definitely. Yeah, I think education does take time for the retail to understand, the security aspect, the yield prospect, and also trust. It takes time to build trust as well. Just in the recent months, especially in September, I think there's large inflows, from organic and also some institution deposit to Zeus. So what is next? I think you briefly talk about some product that you're building around the Bitcoin yield generation. Do you mind sharing that with the community?
Yeah, I 100% agree with what Johnny just said. I think if there are more tokenized BTC coming to the space, and specifically on chain, has to serve greater purpose. I think we have seen that, predominantly by Zeus for the last few weeks. Our TVL has grown 40%. I think in this case, where we talk to a lot of institutions where they just like the fact that there are more alternatives. So besides CBDC and WBDC, and now they have ZBDC as well. And the next phase, what Zeus trying to do is that we will tokenize BTC on top of CBBTC, WBDC, and ZBDC into a different form, serving a unique purpose, whether different strategy, different yield, greater yield, or low risk, high risk. We will tokenize more BTC, while serving a greater purpose specifically on Solana. And like I said in the beginnings, we think Solana has one of the best distribution channels by far in the space. It's not about BTC as a liquidity. Sometimes it's about how can we onboard more other RWA yield creators using BTC as a primitive assets coming to Solana as an on-chain products, enabling future users, depositor using Solana as a blockchain, using Solana as a Bitcoin DEX to leverage the yield to swap to use on a daily basis. So like I said, 90% of trading volume for Bitcoin is still happening on central exchanges. What if there are more products to change the paradigms, especially how we interact with Bitcoin in general for the last more than decades. So I'm very bullish on what we're trying to build, and stay tuned on the next month. I think we will announce very soon to the public. Thank you.
Awesome. We're going to wrap up the space. It is KBW. Appreciate everyone, all the speakers, Gianni and Max, for taking the time to tune in for our space. Yeah, it's a wrap. I hope everybody got really good insights from the insiders to learn more about the Bitcoin adoption and the progression on Solana. And definitely right now, Solana is at a good pace, continuing to grow. Yeah, thanks again, everybody, for tuning in. We will wrap this up. And Max, have a safe flight. I'll see you in Korea. And Gianni, get some rest. Thanks for showing support as always.
Thank you.
All right.